Hello, thanks for clicking through. And as I briefly mentioned on the other side, the investment I want to share with you today is a green investment that can turn 21,000 into just under 100,000 in 12 years, or into 839,000 in 24 years. So this is one of those things that actually helps the planet whilst making you serious investment returns. And in my experience, that's quite a rare phenomenon. But before I go into too much detail about this, let's just have a look at the broader environment that we're living in today. Some of the things that make me nervous, that we've still got all this bickering going on in the Eurozone. Is Germany going to help out these countries like Greece and maybe even France that are getting into difficulties? Will our own economy ever rebound? This seems to be the longest, deepest recession I can remember. There's also this underlying shift of economic power to the east. And with all this money printing going on, you kind of think, well, there's going to be some inflation coming somewhere and our savings are just going to be eroded. It seems to me like cash in the bank is one of the most dangerous things you can have at the moment. And also, looking at Mr. Osborne there are only going to be more and more taxes on those of us who've got above average income or above average assets. So we've got to be ready for more targets, more money raising from those of us who've got a bit of cash in the first place. But here's what I'm really scared about, and that is running out of money in retirement. Having to tell my wife Daphne that we're now living in poverty, and can she manage on a shoe allowance of £5 a month? I mean, the great news is that if I retire at 60, I can probably plan on living for another 25 or 30 years. The bad news is I've got to somehow fund that. So that means I've got to look very carefully at the state of my pension income. And I don't know if you've done the mathematics, but to get a 50k a year pension, you're going to need something like 1.75 million in your pension pot, and that is actually higher than the government now allows us to have. If you wanted 100k, you'd need 3.5 million. Especially if you wanted to be index linked, and if you wanted to go to your spouse after you shuttle off your mortal coil, then you really are talking about lots and lots of money needed in your pension pot. And yet 80% of us have got less than 50 grand in our pension savings. So this ain't going to end well. I've concluded as well that no so-called professional money manager cares as much about my wealth as I do. 80% of them fail to even beat the market when you track their performance. So I've got to take personal control of my financial future. But I've also got to look for something beyond what you find on the high street. Some extraordinary investments that can give me some extraordinary returns. And it's one of those that I'm sharing with you today. So what are my criteria for this kind of investment? Well, obviously I am looking for above average returns, but I don't want to be stupid about this. I want an acceptable level of risk. And don't let anyone try and convince you that there's any such thing as a risk-free investment. You put cash under the bed or you put it in the bank earning 1 or 2%, it is losing value the whole time. So even cash in the bank is far from safe. I've already got quite a few stock market related investments, so I wanted something that wasn't correlated to that. And I really wanted a real physical asset, because that I think will help to maintain its value as currencies get devalued through things like quantitative easing. I wanted a mixture of kind of capital growth and income, preferably with some tax efficiency, but it also had to be easy for me to understand. I really don't want to get into some of these really complex things where you need a degree to understand them, and no one can explain how they work to you. So what is this thing that I'm talking about? Well, the good news is it's been around a long time, for centuries in fact, and for the last 100 years it's performed better than really favoured investments at the moment like gold and property. In fact, throughout the 20th century it managed to beat inflation by 3.3% every single year on average. In the last quarter century it's been going up something like 14% a year, and it's in greater demand than ever. Up till now, it's actually been in the domain of the big financial institutions. It's only relatively recently that retail investors like you and I have been able to gain access to it. And it's what your parents told you money doesn't grow on. They were wrong. The answer, of course, is trees. But not just any old kind of trees, it's a particular kind of trees in a particular location. These are Molina hardwood trees, grown by a British company based in Bournemouth called Ethical Forestry, on plantations that they own in Costa Rica, where there's an American team of experts running them, plus it's actually now about 120 local staff helping out. And they manage the whole process from the first seedlings right the way through to 100-foot high mature trees in just 12 years. What's so special about trees? Well, here's a quote from Jeremy Grantham, who's a billionaire and runs GMO Investments, which has a massive amount of money under management. He says, "Timber is the only low-risk, high-return asset that there is." The only low-risk, high-return asset that there is. The Telegraph says that they're projected to rise in line with the global population, which is going up 55% by the middle of this century. So demand for timber very much reflects population trends. The more people on the planet, the more timber we need. The FT investment advisor said that investment in ethical timber is the future and your legacy. So in other words, you can make a great return on this. You can also help to really turn around the tide of what's going on with the planet, and to help put something back in terms of making us all more carbon neutral. Demand is going to soar as economic power shifts eastwards. Countries like China are going to need 150 million cubic meters within a couple of years. India needs another 93 million cubic meters by the end of this decade. And these are just two examples of the massively growing demand for timber. So these plantations are owned outright by the company. There are no heavy gearing in the company. There's no ownership disputes, no land issues. And you as the investor get a full agricultural lien, as it's called, on the land on which your trees will grow. You don't actually own the land, you own the trees on the land, and those trees are registered with the Costa Rica government. The GPS coordinates of each individual tree are taken and registered, and you receive those registration documents in your owner's pack. And the plantations are very carefully managed on a very sustainable basis. They actually have professional foresters living on site and just monitoring everything 24/7. They've chosen Molina because it's one of the species that grows really quickly. So 2 meters high in just 8 months, 6 meters in 18 months. They are 100 feet high in 12 years. They're very resistant to disease, but if something should happen, if any of the trees perish in the first 3 years, they're replaced free of charge. So there's a 12-year growth cycle. They have 3 thinning harvests in years 4, 8 and 10, and that means you get payments from those throughout the cycle. It's all sold in the local market. Costa Rica's very short on timber. They import a load of timber themselves, so there's a ready market for all of this stuff right on the doorstep. And the returns that I've quoted assume a fairly conservative increase of 7% a year. In the last 5 or 6 years, it's been more like 17%. And so far, there are 15 SIP providers who've approved this investment if you want to do it through your personal pension. So who's it ideal for? Well, I've identified 3 possible types of package. People like myself who need to rescue their pension, people who want to invest now to set their kids up for the long term, or perhaps those at a later season in life that want to leave a legacy of financial freedom to their family. So let's just have a look at what the actual payment profile would look like in those 3 examples. If you're looking for a boost to your pension fund, you can invest £21,000 now, and then these are the payments you'd be scheduled to receive over the coming years. Something like £5,500 in year 4, around about 15k in year 8, around about 20 in year 10, and around about 60 in year 12, all of which adds up to, as near as makes no difference, a £100,000 return over that 12-year period. Now, what about making your child a millionaire? Most people's strategy for that is probably something to do with the lottery or premium bonds. Last time I looked, the lottery jackpot odds were about 14 billion to 1, so good luck with that plan. I think a much safer bet might be to put 21,000 away now, and then over the next 24 years, you're going to return something like 840,000. Now, obviously, you've got to basically reinvest the early trees in the early proceeds in additional trees, so you get an effect of both compounding and multiple growth periods within that 24 years. That's why you end up with an order of magnitude higher returns. So as you can see there's about 44,000 in year 16, well over 100,000 in year 18, 176 in year 20, a third of a million in year 22, and another 163k in year 24. Add it all up and you're very close to £1 million worth of returns over the 24 years. You could also combine the two if you're wanting to perhaps leave financial freedom to your family. If you put 42,000 in, you could put some of that, half of that, say, in the 12-year plan and half in the 24-year plan. Then you get this kind of income profile. So from year 4 all the way through to year 24, you're never going more than 3 or 4 years without a substantial chunk of money coming out of that investment. So you can imagine how that could be used to cover things like school fees, university fees, deposit on a house, putting something into a pension plan for your children or your grandchildren. These are life-changing amounts of money. Even allowing for inflation, these are going to be significant amounts, and it's all from a one-off investment today that you can just kind of set it and forget it, and it'll just deliver for them over the next quarter century. Smart Money said that timber's been the only asset class in existence that has risen in 3 out of the 4 market collapses of the 20th century. So it's, there's no such thing as a completely safe investment. Don't for one moment think I'm trying to suggest that. All you can do is try and get as many of the ducks in a row that point to this being the right thing for you and point to it being a safe investment. So here's another example that says timber has been one of the best performing assets in difficult markets during the 20th century. It's HMRC compliant and SIP approved, so you can actually either invest directly from your current SIP, or you could put new funds into another SIP or transfer, but there are 15 providers who have already approved this, and that way you can get all of the proceeds tax-free. The Guardian says it's a flexible, stable investment that comes with a clear conscience. And it's been surprisingly important, this, as I've spoken to many people in the last 12 months about this investment. The fact that they can not just get a good return, but be doing something useful for the planet has been really important in their decision making. I had no idea until I started my due diligence on this that nearly half of the timber felled in Europe is illegal. There's actually a law enforcement agency for forestry in the EU. And of course, the more they tighten up on the illegal stuff, the more the demand for the 1% that comes from sustainable sources is going to increase. And what I'm sharing with you today comes from that 1%. So there's a further upward pressure on prices as they gradually get rid of all this illegally felled timber. Now you may think Costa Rica means Costa Rica. It's actually a very stable country in Central America. It's been stable politically and economically for more than half a century. This is the sort of rich coast area, got a tremendous climate. Loads of Americans use the place as a sort of Côte d'Azur, if you like, for holidays and retirement homes. The CIA website's a good place to look if you want to confirm how stable it's been. Here's another shot. You see the boats in the marina. They actually have abolished their army, so there's no danger of a military coup because there's no military. And they're also going to be the first country on the planet to be carbon neutral within the next decade, and they're on target for that. And there's also some amazing national parks and wildlife collections here to see as well. So it's a beautiful country. You really should go there. Intel has invested hugely in a semiconductor plant. GlaxoSmithKline, Procter & Gamble have also got big bases in Costa Rica. They have their own currency, the colon, but it's pegged to the dollar, and all the timber trading is carried out in the US dollar. Costa Rica is important because the government saw tremendous deforestation in the 70s and 80s. So in the late 90s, they started a reforestation plan with a lot of tight regulations. They have government foresters that come and inspect the plantations 2 or 3 times a year. And the climate's perfect. There's lots of sun and lots of rain. The Molina species has grown here since the 1960s, so it's a great place both climatically and also from a regulatory point of view. The plantations are carefully tested and chosen before they're purchased, so they look at the soil acidity, the irrigation and so on, and they use the highest quality seeds so that they get the best results. And then they just really manage it very well. They've got fences around the perimeters to keep the animals out. They've got the on-site experts who look at the way everything's growing and keep everything trimmed and under control. And then when it comes to logging time, they've built a European spec timber mill. They could have gone for a cheaper local option. They've actually built to the very highest standards in the world. And they use everything. The core of the tree that gets used in furniture, the outer parts used in packaging and making pallets. They have contracts with fruit exporters for the pallets. Even the sawdust is reused and recycled. If you want to come and have a look, by all means, I'm going to Costa Rica in February, March time. I'm going to see my own trees out there and also just enjoy the scenery and the coastline. It's a brilliant country. I met someone recently who's traveled to 71 countries in her life, and she's decided she's going to settle in Costa Rica because it is the nicest place she's seen anywhere in the world. Obviously, any investment you have to think carefully about your exit strategy. The programs are designed to run for 12 or 24 years, but you are the owner of your trees and you can sell some or all of them at any time. Obviously, you'll get less value in the early years, but it is your prerogative to do that. There is a 15% withholding tax, but you can fill out a form DT 5201 to avoid that if you're a UK resident taxpayer. Most people tend to invest in their SIP, but if you do it directly, you'd actually have an income tax liability, not a capital gains, it's an income tax liability once the value of the payments you receive exceeds the amount you invested, which typically would be in year 8 on the 12-year plan or year 16 on the 24-year plan. You can also leave your trees in the ground and just sell them to another investor. If you just agree a price and valuation with them, there's a 10% charge for all the legal fees included in doing the transfer, but that is another option for you as part of a flexible exit strategy. It's also a sustainable investment. During the growth phase, the trees are taking in carbon dioxide and giving out oxygen. And once they've been harvested, a lot of the land is going to be set aside for what's called a forestry easement trust. So it will become effectively a permanent forest with facilities for the wildlife there, with corridors to allow them to get in between the trees. So not only will it be helping the environment while your trees grow, but you'll be leaving a green legacy in terms of these easement trusts and a long-term environment for the wildlife in Costa Rica. I'm seeing investments from the minimum of 7k all the way up to people investing hundreds, 110, 120,000. Around 1,100 people have already made the decision to invest, and there's now 2 million a month coming into the company. They actually have a maximum capacity of about 3.5 million, which will be reached probably in early 2013. So it's possible by then you may be put onto a waiting list because they've simply taken in all the investment that they can support. What are the downsides to this? Well, some of the UK tax breaks don't apply to forestry, but in the UK you'd be waiting 40 or 50 years for a decent return, whereas here we can do it in 12 years. And you must be clear, this is not a regulated investment in terms of the Financial Services Authority, but on the other hand, some of the things like Northern Rock that were regulated have managed to lose a shed load of money for their investors. So you have to do your own due diligence on this. It's not a regulated investment. You have to decide for yourself. So once you've invested, you'll get a receipt for your funds, and then they'll start to register your seeds in the nursery, and within about 3 months those saplings will be ready to transplant, and then they'll take the GPS coordinates and you'll get those as part of your owner's pack. The trees are inspected regularly and you'll get a forester's report around the time of your first thinning harvest, and at that point you either receive the payment or reinvest in more trees if you're in the longer term plan. There are no ongoing charges here. The only time you pay anything is when there's a harvest done, and there's a 10% charge for that. So unlike many of the schemes I've looked at, you only have to pay money at a time when you're receiving money. There's no other charges involved. And one of the things I love about this is this kind of indisputable law of nature. Trees just keep growing year after year, and as they grow, their value grows. On the other hand, with things like the stock market, you'll see them go up, down, sideways, year to year. It's impossible to predict. Whether the stock market's going down or up, the one thing you can be certain of is the trees grow, their value is increasing. Now, just a quick disclaimer, I'm not a certified financial planner. I've already mentioned this is not an FSA regulated investment, so please read the brochure, ask me for the full pack to be sent to you, do your own due diligence, take any advice that you need. What I'm providing here is for information only. I'm not giving you investment advice. So if you are interested, you can contact me either on 020-8940-7000, or you can email graham@wealthinvest.co.uk. You should already be able to download the brochure from this page of the site, and also you can get the full physical information pack if you fill in the form with your address. I'll send that out to you, and then we can schedule a phone call to go through any questions you've got in detail. So I think this is a really exciting investment. Very much hope you'll enjoy reading about it and hearing about it, and I'm ready to answer any and all questions that you have. So just get in touch and we'll hopefully take it from there. Thanks very much for listening.